Demand for the industrial and logistics sector remained really bullish for the first 3 months of the year, posting a healthy take-up of 8.6 million square foot. This actually followed a record level of annual activity, which saw take-up reach 49 million square foot in 2020. But if we look at quarterly trends, and Q1 2021 is actually relatively in line with the 5-year annual average of 8.7 million square foot, which is quite astonishing considering the record numbers seen in 2020. It is clearly noticeable that all size bands have recorded strong occupational demand, with the larger end of the market also breaking new records.
I think the other important thing is the amount of spec which is going to be constructed in 2021. From a Colliers research perspective, we believe it's going to be around 11 million square feet for 2021. What's really positive about that so far is 2.5 million square feet assigned, which obviously takes availability down to circa 8.5 million. This shows a really positive trend going forward for the sort of 100 to 200 as well as a larger end. Prime product where you've got it in a great location with a good building and an excellent tenant on a long lease. I think there's going to be still massive pressure on this type of product. And one of the reasons is very little of it is coming to the market. We're involved in a number of key occupier deals for in excess of 700,000 square feet across the country, where I wasn't involved in the investment sale, but when the investments did go to the market, they went for anything from between 25 to 50 basis points, and in one of the cases, 100 basis points below what the quoting terms for the investments were. I think the other benefit maybe for some of the occupiers on this is maybe developers and funds can look at offering a slightly shorter lease term because the yields are so attractive, maybe on something in a prime location with good covenant, for something on a 5 or a 7-year term. The argument could be had, there's not a massive difference between a 5 or 6 year lease to a 10-year lease, which may be more helpful to the occupiers. I'm not advocating everyone should do it, but there is that potential option out there in the market.
Look at the construction industry globally, and we're part of that, obviously. That accounts for about 40% of global carbon emissions. So in terms of when you're talking about ESG, one of the key factors is to reduce carbon. And as developers, we obviously have a responsibility for that, to do that, and to sort of seek continuous improvement on that line. One of the aspects we've been able to do that is in the slabs, in the concrete, we've used a substance called GGBS, and that's basically power station ash, and that reduces the cement content, so that reduces the carbon footprint of the slab. We do that in all our buildings. Other aspects could be intelligent lighting, building environmental analytics, which we put into offices. So when customers take our buildings, they can choose to extend that into the warehouse area for their fit out. So that gives a sort of smart building. They can analyze where the warehouse is being operational effectively or more efficiently in other areas, etc. So it gives them knowledge and data to use to improve their operations, which reduces their operational costs and the energy they use.
DHL has set out that they're going to be carbon neutral by 2050. And that's a really big task for our industry. And that covers the whole business. The big challenge for us is we now are setting ourselves a target of having carbon neutral or net zero carbon warehouses by 2025. And that's a big challenge for us, because we've obviously got, by implementing a renewable energy hierarchy in conjunction with energy consumption reduction, the ideal aim is to reduce CO2 and emissions to net zero as soon and quickly as possible. What we can't do is possibly in certain cases completely do that, so we'll obviously be doing it some sort of offsetting. But that means for us in our sector that we've got to look at the design of buildings. Bruce touched on obviously efficient lighting, intelligent high frequency charging, using green energy, electricity is going forward. and all sorts of technology, warehouse management systems, heat ground source pumps, biogas, reflecting coating on buildings. We're looking at everything to try and mitigate the amount of energy we actually use in the building, as well as on top of that with regard to going forward, the operation internally becoming more and more sophisticated with technology inside the warehouse.
We do like a good stamp on a building to make the process a lot easier. But the reality is that when we talk about things like net zero, for example, I think we need to acknowledge that it is a rather complex topic, and I tell you why. I think Bruce made a really good point in terms of that approach to net zero emissions, and they are looking at the whole life model of the building. And I think for the industrial sector in particular, that's really key, because the embodied carbons that is the carbon related to materials, construction, disposal, and refurbishment for a typical warehouse is more than, or is around 50% of the total life cycle emissions of that property. So to get that right in the first place is very important, and I think metrics and legislation is definitely going to move towards specifying a percentage in terms of carbon embodied carbon reductions that you're going to have to achieve down the line.
The critical factor is we're always being forced to drive down costs in the business, and that comes from trying to take more technology to improve that. And we're in a place where the energy data, smart meters, etc., just one of the examples where we're always looking at how do we get cost out of the business, and that comes through the whole process of evaluation. And we're always evaluating new technology, like LEDs came through. We didn't jump on straight away. We evaluated over a number of years, did some testing before we eventually said, yes, LEDs are in a place where they start really making an impact and a difference. And again, with photovoltaics, again, people suddenly say, oh, put photovoltaics. Well, you look at payback periods, etc., how good they are over a period of time, you do testing. So all this is all about cost and how we get cost out of that. And that is going to becoming more and more prevalent in buildings.
As with most things, counter-cyclical opportunities, if buildings start to get a little bit more affordable, do you think that'll help in terms of, opportunistic purchases coming in, more stock they can buy to spruce up?
Thanks, Jessica. I think that will have an impact on price. And I think the question is a good one because it comes down to timing. I think my personal view is at some stage that it will have an impact and the pricing will move out. I think when that actually happens, that is a tricky question. But if you were to ask me and put it, I'd say 4 to 6 years, Jessica. And I think, it will have an impact on some older accommodation if substantial works need to be done to bring it up to a certain level from a sustainable perspective.
Let's say you look at central London or you look at other major markets in the UK. So prime yields and prime demand is usually for those buildings who are quite sustainable. So, and most of those investors, particularly Asian investors, are always looking for a shiny building and also for a core or value add development opportunity or investment opportunity. Hence why there is not really any hard evidence, mathematical evidence to justify that. But of course, the office sector is completely different than our sector. Certain buildings, if of course purchased on a certain time, can be redeveloped potentially into residential, or given that your office building is an urban center, can be of course sold to a different use, potentially a hotel. So it's completely different from our sector. So my personal view is that we shouldn't really be looking much at what happened in the office sector, what's happening at the moment in the office sector, but we should really focusing in details in our sector. So for instance, I'll give you an example. So let's say we have a distribution warehouse is in the middle of of, I mean, close to motorways. I mean, there's not much else you can do with that park or that warehouse. You can't really build a residential building on a hotel or a shopping center. Hence why we should be mindful and focus 100% and act as soon as possible, where possible, trying to future-proof our investment.
Industrial and logistics sector can be, the champions for solar. I mean, about long leases coupled with roof space. I mean, maybe solar and rain harvesting systems. But we've got the roofs, and that's something that needs to be considered also, from the development point. That's something that in another sector apart from maybe shopping centers you're going to find. So there's a great opportunity right there to increase our renewable capacity, maybe mixing it with load management and battery storage systems, which are going to be, I think, essential, an essential part of the mix.
Renewable resources, thankfully, hopefully, the government is actually making some big headway, big investments into that in the north of England, also in Scotland as well. The agenda seems to be fairly good, particularly when you compare to other European countries. So I'm hopeful that in 5-10 years time, the UK will actually be running, the majority of power would be from renewable resources. 5 years time is a very ambitious goal, but 15 years time we could get there.